Hey guys, Austin Booley again. We're going to talk about open interest and volume today. So, open interest and volume are critical to trading options effectively. It's almost like the volume of a stock. You cannot trade a stock, you cannot get in and out super quickly if you do not have volume. That is much harder to determine with options. So, this is SPY, which follows, it's an ETF of the S&P 500 is what it tracks. So since this follows the S&P 500, it's going to be a very liquid pair. So we're going to go to trade here. We're going to, SPY, there it is. And we're going to, I'm going to show you, so right here you can go in, you can click, you can adjust. I'm going to put volume, and then my other one I have here is open interest. So this is the two things that we're going to determine to see if there's enough volume and liquidity available for these options. So the volume here, we have great volume, 13,000 contracts. Let's even look at all of them, which is going to be a bunch. Whew. But as we get more toward our strike price, and obviously what is this higher, we got a lot of volume. So I'm going to bring it down to just 14 here. This is more manageable. But look, 25,000 contracts in one day. So this is about $50 a contract, right? 50 bucks a contract. Let's say you want to trade $200. You need 4 contracts. 4 contracts out of 25,000 is pretty good. However, you have to understand volume resets each day. Since volume resets each day, what we're going to look at is our open interest. Every time I trade a weekly options, I trade the one that has the most open interest. Open interest is the amount of contracts that people are holding. So for instance, if I bought this weekly on Monday and I wanted to hold it through Thursday, I would have bought, like, let's say 5. And since I would have been holding on to these 5 or holding them, then these 5 would have stayed there. So basically this 11,767, there are 11,767 contracts being held right now. Now the volume is the amount of contracts that have been bought and sold, okay? So we have 25,000 that have been bought and sold today, okay? But we have 11,000 that are being held on to, okay? So this is an example of a very liquid option, okay? I want to show you an example of a non-liquid one, which is going to be my GME right here, okay? Look at the volume, 0 contracts traded, 0 contracts traded, 0 contracts traded, 0 contracts traded, 110 contracts traded, no open interest, nobody's holding it. If nobody is holding an option, who's going to buy it or sell to you? Okay, that is the problem. That's why we want to have high open interest, or a lot of open interest. Okay, 9, volume of 9. So if you want to buy, see, this is a $30. So let's say you want to buy 4 contracts for $120. 4 contracts of this 9. You would need a lot of these 11 people holding on. 11 people. You would need 4 of those 11 people to sell to you. Now that is pretty unlikely. Now if we look back at SPY, look at these. Well, let's just go for instance, 758 people holding, okay? There are 758 people holding these contracts. So you only need 4 of those people to sell you a contract, okay? So that's not bad. I mean, now if we're looking at GME, if we're looking at GME, you're going to need 11 of these 4 people, or, okay, now it gets a little more, but as we get and progress into this future area here, where we have a lot of open interest, there's no volume. No one wants to sell their contracts. If nobody wants to sell their contracts, if you sell a contract, I mean, if you end up buying a contract from one of these open interest people who have the contracts, you're never going to be, well, I mean, you probably would be able to resell it, but no one would be here to buy it because they see that the volume is so low. All these open interest people who are holding on to their contracts are stingy and they don't want to get rid of it. But not in SPY. We have 25,000 people trying to either buy or get rid of their contracts. This is just an example, and that's why I consistently trade Netflix. Facebook and Twitter. Those are my go-to. If we look at Netflix, look at the volume. We have about 1,000 to 4,000 contracts being traded per day, and the open interest is huge also. Facebook, look at this. 54,000 contracts being traded in a day. Look how many open interests we have. This open interest, there's 20,000, 10,000, 12,000. That means there are 12,000 to 20,000 or 10,000, 5,000, whatever contracts, all these contracts that people are willing to sell. Okay? Most likely, we can buy one because there's so many people that if we give them a good price, they'll probably let us buy a contract. Let's go down. My next favorite is Twitter. Not as popular today, but still 11,000, 3,000, 2,000. That is way better than the 0182. You see, so even though open interest is kind of correlated to volume, they are both measures of liquidity for options, and you want to make sure your liquidity is there. Make sure your volume, people want these contracts, they are exchanging these contracts, and the open interest that people are there, have the contracts, and that they are willing to give them up. So that's all you need to know about, or what I think you need to know. Well, that's all I know about volume and open interest. I hope y'all can stay successful in the options market. Good luck, and again, the TechBuds Solutions and another options trading group is below in the link. You don't have to, but if you want to learn some more, it's down below.